Hello guys, welcome to a Trading Parrot. It's Monday morning, 8 a.m. A couple of days ago, I mentioned that something is cooking. In this particular video, 20 minutes on a Friday, I mentioned that there is some patterns on the 4-hour that could be playing out to the upside thanks to the buying wall that we spot on Binance. Then on a Sunday, we noticed that it was already reclaiming and breaking out on the 4-hour, and we were speculating, can we get beyond the 4-hour? Because the 4-hour has been the recipe for the fakeouts. Can we do it also on the daily? And more importantly, on the weekly. In today's video, we'll see how far we have gone. We'll look into the general markets to see if the fuel is coming from that side and if we can get anywhere further away. Because Monday and Tuesday is the day where every fakeout on the 4-hour has been confirmed. So can we get things to go beyond that level? And if we can get above 90K, that will be sweet for a reversal. Guys, if you like this type of content, make sure that you're subscribed to the channel, hit the notification bell every time I put out one of these videos, you're gonna get notified. 1,000 likes will be fantastic. The views have been phenomenal, despite the fact that things are very quiet out there, and that is a good sign, guys. Today is 24th of November, so there's still about a week left of the Black Friday sale on TTP, trading different. High block capital, material indicators, trading view, 2bit, everywhere you're gonna get 80s, 70s, 50% discount. Have a look at the description. Don't be silly, don't miss out the best prices you're gonna get for any subscription that you need to become a data-driven trader. CME, let's have a look because we have a new baby born in here. It's so cute. Look at this, 85,900 price on CME, and on Binance, we could say that this could bring the price down into 85.5K. That's where is the bottom roughly of the CME Gap price on Binance. So keep that number in mind, because if we get a market open with a little bit of volatility in general markets, that can very easily take down the CME Gap that we currently have. I'm gonna remove the previous ones because they are all gone, they're all filled, so we're just gonna focus on the $85,345 to be very precise. And yeah, over the weekend we pushed the open interest down below in here. I think it happened late last week, and we are not being able to reclaim $31 billion. So remember that we are playing with fire in here. If something moves too fast, it could hit the technical target of $17 billion in terms of aggregated open interest. That coincides with a price of about $67,000, and I'm gonna try to hold on myself from repeating that number. In the previous video was pretty much like all the time saying the same number, and I really want you guys to repeat with me that guys is our risk at the moment. So this is the breakout that we have over the weekend. We say we are gonna get into 55 intra-candle. We did it, okay? Believe it or not, this week's in there, we're about to hit that yellow line that is moving. The one that is moving is precisely RSI 55.65. The straight line downward sloping, that is the price resistance, and we were in a situation where we needed both to break out. So if we come back down and we do a retest and we can take that CME gap, and all we do is that, no more than that, okay? Let's take the CME gap, let's close it clean with one of these fair value gaps, and let's exit from this falling widening wedge. And thanks to this reclaiming here on the price and the reclaim on the momentum together, we can use that potentially to get into 66 RSI as a target. That is more or less located at the price of 91,600. Isn't it cute? Yeah, it's nothing really. That is not the full reversal that we need, but going back above 90K is gonna make a lot of people bullish, and hopefully that can continue into the hundreds to turn, if we really get lucky, into a V recovery. But only general markets can induce that price action. Crypto by itself is never gonna make it if general markets continue to the downside the rest of this week. So That cube move on the 4-hour can turn into a fake out, but now we have a little bit more of reassurance because the daily time frame has managed to reclaim and settle above the global support. We haven't done it in the similar way that we did it around here. In this case, for example, we pinched this from an RSI of 32, we went to 18. That was in August in 2023, and the reclaim didn't happen overnight. We spent here just going back into 21 and then going into 27, then coming back down into 24, and then suddenly you wake up one day and you are teletransporting to 53. That sort of explosive momentum reclaim of a global support is what we need to produce a new channel to the upside that can really get us as close as possible to the top. Remember, I'm not expecting to get the fifth wave in here into 84 with around $170,000 of Bitcoin. I'm expecting some move up, maybe a lower high relative to this, maybe a 66 or something like that. In that case, we're gonna get somewhere below the all-time high. Hopefully 107, 110. If we get really lucky, 117. Now, if we get into 117, if we do it fast, we can start talking about a V recovery, but let's not mix pears with apples. It's too early in the morning. Let's look at the CPR. CPR hasn't managed to do that much. The daily, the 4-hour time frame had good news, but CPR is still being rejected from 88.281. There is some work to do. We have some weak to the downside. That is bullish. That is the sort of action that we want to see for reversal to upsides, but we really want to go beyond that level of 88. 88 is a resistance, and if it proves too intense, we earn ourselves a trip into 74. And below 74, guess who it is? I'm not gonna say it. I'm forbidden to say that number. You have to write it down in the comments. I'm gonna skip all the things I'm saying about the fractals. You already know that. You've been watching my videos religiously over the weekend. That's why I bother making a video on a Sunday and on a Friday as well. So now I'm looking for this stochastic RSI bullish cross, hopefully to play out. And the weekly is still very far away from reclaiming that 44, which is what we will need really to have any hope to go into the resistance of 62 and to prices of 131, right? We did it on the 4-hour, we did it on the daily, but the weekly needs to reclaim 44. To reclaim 44, guys, we need to go to 96K. Ouch. Yeah, that is not that far. 10K doable. Yeah, sure. But if we do it, let's try to do it by reclaiming as well the 50 weekly moving average. Let's try to do it by breaking beyond the 0382, which is this Fibonacci level that we couldn't do it in this area. If we don't do it, we get ourselves the perfect recipe, not just for a dead cat bounce, but for the biggest leg down. This leg down is 64%. So in here, we are playing with fire. If we get to 96, 98, 100K, all that area there is a recipe for potential biggest rejection and the biggest leg down of bear market. We are already halfway through in the momentum in bear market, guys. Believe it or not, I cannot believe I'm saying this. I also was not able to believe that we are entering in a bear market when I saw the ratios, all the charts of ratios. They were screaming bear market, and I made videos in October about them saying, sorry guys, ratios chart are saying bear market is here. And I say it, and I sustain that same thing with honesty. I was thinking, no, I don't think so. I think we still have a leg up. And the leg up was to 107. That's it. So they won. I lost. Technicals are better than the opinion of the Trading Parrot, always. So whenever I do these videos, sometimes give the Trading Parrot less credit, and the technicals that I use are better than me. Many times I made mistakes by saying, no, the technicals are gonna be wrong. Look at this. The SOPR, this a massive move back up from the bottom of 0.97, which is capitulation. Now with the move up, people are starting to take profits aggressively. And that is dangerous because they are doing it right before we enter in this pattern. So careful, walk slow through the rocks because it might be slippery and you might hit your bottom very strongly. Hopefully just your bottom. You might hit your teeth against the floor in here. It's gonna hurt if these profit takers sustain this attitude at these dangerous levels of resistance. CPR, that level there is very dangerous. So we need to not even breathe at the moment. Unfortunately, guys, we don't have an LS2 signal in here yet. So that would have been amazing to get some reassurance to buy this level, but it's not there. Let's continue with having a look at everything that is coming in this week that is important. Monthly hasn't reclaimed the 90K, but hopefully by the end of the month, November, we can reclaim 93. That will be phenomenal. The higher we can get in here, the smaller the body is at the end of the month, which is just 1 week away. The more chances we have the next month to do something that can bring us back up. Let's look at the fear in greed index. We are at 19, still extreme fear, but we came from 10, so pretty much 9 points up is good. We don't have a warning buy in here. We just stay in the period of the warning buy. Potentially the first green weekly candle. Let's cross fingers for that. In terms of short-term liquidity, we can move this dude all the way here to see what's biggest at the moment. And we got that 76, or we have to go to 111, where we also have a massive spike of open interest, opening shorts there. 1, 2, 3, all done. Number 4 is our risk, 74 and 67 this week. Oops, I say it again. 30-day liquidity, we got this big chunk at 85.8. That can bring the price down because it's a teaser for price to go into 85 to the low 85 and close the CME gap as well. On the upper end, we have 88.5 and very high, we have 97. On the weekend, we noticed that the CBD flattened in this area in here at 328, and that is basically the aggressive sellers across exchanges. This time is Binance futures. They slow down with the selling, and we have to say that the aggressive sellers have been pretty much present in Binance. So Binance stopping with their crap is good news, guys, and I have to share it with you. Let's hope that that area is not just flattened the rest of the week, but also starts reversing to the upside. That will mean that aggressive buyers are stepping in. They won't do that unless we go above 90K. At that point, people are gonna feel like they're missing the bus, and they're gonna start aggressively buying with market orders. If we do that, we can see this pointing up. But if we get a rejection, they're gonna continue with aggressive selling. Very annoying. We have some support 3K coming in at 86, and I suspect, I smell it, that there's something in general markets which we have to look into this morning. I haven't checked yet, guys. I haven't checked. The buying wall is starting to shift up. You see that initially it was at 85. Now they place it at 82.7. So hopefully that chases the price and it pushes it into 90K. They're going to get that confidence to do that only if general markets are also in the same mood. If we do that, we have up until 91 with a fair value gap. Then we really need to step up the game in here and jump this quantic move into 94 to continue consuming the ones on the top. Below the price, there is nothing really heavy unless we go for 74 and beyond. I'm not going to say that number again, only 2 times in the video. So let's go into the order book. But before we go in there, guys, let me tell you that if you want to open an account on an exchange, Tubit is a great alternative. 2 minutes to register, non-KYC, all the leverage that you may need. I don't need all that leverage. 1,000 trading pairs available across the world. They give you $50 as soon as you sign up and $30,000 if you start depositing and trading with decent volume. And there's $200,000 to reclaim. There is the first link in the description to be part of this event. So we can see that the longs are at 69. So that is still decent. We say 70 in a bull market is good for entering. And now that we have moved all the way to 86, not seeing the longs going down to 50, it's something decent, it's something good. I wish we were at 87k and we had still over 70% of longs. That will be reassuring that they are not rug pulling. At the moment, it's a mixed bag. It's 69, it could be better, and the order book is what currently is calling my attention. All the way to 20% deviation is dominated by bidding, by orders below the price defending. But the percentiles in here are not very shiny. Not that we actually need that, but it's always good to note that there is a sentiment to buy the dip. Currently, we are running out of petrol in here. We had 800k of delta, putting the shorts at risk, and that has diminished into 100k only. Remember that if this becomes a pump, that is going to switch into the green and is going to put the longs in risk. But always whenever we get a pump, I want to still have 300, 400k to have that momentum to upside. So maybe price needs to go down now, kill that CME gap, close the gap, create new liquidity from shorts, and continue to the upside into the level of 91 where we have open interest, or hopefully into 100k where we have roughly 600 million, or into 1 billion at the top at 110. Right, let's look at what's going on in here. If we have any interesting news that I have missed, I'm gonna read it. Rate cut, we already know that it went back into 70%, so that's the big news of the weekend if you missed the video yesterday. ETFs doing a positive move on Friday. We already know that. 3.7 billion in long positions, liquidations over the past week. That is the bearish one, but that belongs to the past week. Macro context, the S&P down 2% last week. It's not mentioning anything on futures. DXY is at $100. That's where we left on Friday as well. Gold was down. Risk off tone on AI stocks and crypto continues, except for Google, that took all from the rest. It took from Microsoft, it took from Nvidia, and I'm gonna continue monitoring what's going on today. Later on the day, hopefully we see some reversals. This is the economic calendar for this week. What do we have? We have the core PCE, personal income, personal spending. That's on Wednesday. We also have on Tuesday PPI, retail sales, and a few more events on Friday. It's been back and forward with the Fed decision on December in poly market, and so on the Fed Watch tool. Today we have 71% still chances of easing with 25 basis points. Last week we saw that the Federal Reserve was pushing up, but very mildly. No news yet on seeing them reversing fully to the upside. If you want to trade general markets, VT Markets is a great option with a 100% welcome bonus. The link is in the description. Nothing has really changed in terms of the macro in here. We still have the same bullish things. The Federal Reserve, the 10-year yield going down, the initial jobless claims that have stabilized, oil down, that's neutral. And let's have a very quick look at futures on Nasdaq. Pre-market prices bouncing off on the daily with a high bullish signal in there. We are bouncing off the 21 weekly. Remember that Nasdaq and S&P bouncing on the 21 weekly typically brings back some pushback to the upside. And on the weekly, after this breakdown in here with a revenge rally, pushing the momentum so low into 56, multiple weeks down, maybe the 21 weekly is gonna give some relief. That relief could be a dead cat bounce, or it could put a new higher high. So we need to pay attention to that. My opinion is that now we are in a channel to the downside, but you know, that's my opinion. The technicals are only saying we typically bounce from the 21 weekly before we lose it, or before we put a new all-time high. This is how we closed last week. In the green, I haven't seen anything negative at the moment. S&P, for example, is with prices, pre-market prices below the closing price. So instead of 662, it's opening at 659, but there's still many hours to correct that or increment that. So we'll see. Thanks so much for watching, guys. I'll see you on the next one. Don't forget the sell on TTP and don't forget the sell on TradingView. 80% high block capital, trading different. Everybody is throwing the house from the window. So make sure you take advantage of that. Do not come in December or in January asking me, do you still have those offers? The offers are now until the end of November. Bye-bye. Take care.